Welcome back. Whoa, these masks are a little much here.
Come on, let's
yeah, COVID free?
COVID free.
All right, I'm COVID free.
Okay.
Not
6 feet, but good enough.
We'll make it work. Welcome back to our second ever video market report here on Q3 2020. I'm joined again by our founder and CEO, Terence Kawaja. And we're back. We're back in more ways than one. We are here together in person in the office in this LUMA studio. And most importantly, M&A is back. And breaking news, a big announcement just this morning for LUMA and for one of our clients. TrueOptic is being acquired by TransUnion, one of the leading consumer credit companies. TrueOptic is a leader in CTV identity graph. They have a patented household graph with over 80 million U.S. households. And Terry, just take it away. Tell us a little about this deal.
This is a great deal for a number of reasons, Connor. First of all, we're back. We're back in the M&A business. I mean, after 2 quarters of COVID, dry spell, it's great to see M&A activity coming back to the fore.
Right.
Secondly, we've got this is a strategic CTV and identity transaction, 2 of the subsectors that we've been seeing a lot of activity. And third, this is TransUnion's 3rd acquisition in 18 months into digital identity, and I think it represents a very interesting trend. You couple that with experienced investment in InfoSum, and we're talking about something very interesting to look at going forward. And then finally, this is the first transaction from one of the companies on the Black LUMAscape, Andre Swanston, our client, a great African-American entrepreneur. It's great to see these kind of outcomes, and we hope will be a sign of more to come under a trend we're calling Black Exits Matter.
Perfect. Well, let's get into the actual report here. Just as a reminder before we jump in, this will be on our focus areas. So we see that as the intersection of media marketing and technology. You can read that as ad tech, Martech, digital content, and we'll add on direct-to-consumer brands. So, at the end of last quarter, we did this presentation and we really ended it with this case for optimism that we saw M&A activity coming back, right? We were in the lowest ever quarter we've seen. We all know 2020 has been challenging. And yet, frankly, we called it. Well, here we are at the end of Q3 and M&A is back. And most importantly, strategic M&A is back. So while numbers sure are still well off 2020 and maybe what our norms would be for overall M&A activity, the strategic deals are coming back, scale deals over 100 million. You've seen this across all our sectors, ad tech, Martech, content, and the direct-to-consumer space. So, maybe what do you chalk this up to in Q3? Coming back?
Well, look, you're right. The spring was kind of scary, right? With the onset of the pandemic and the associated economic lockdown. But the good news was, as we foreshadowed in our last report video, the recovery in advertising has largely been V-shaped. It's come back, and what's great is that, dialogue came back midsummer around strategic deals, and here we are manifesting a somewhat of a return, and we believe, more importantly, Q4 will be very vibrant. We're seeing activity in areas we were seeing activity in before. Think about the massive changes that the pandemic brought about, right? More streaming, more gaming, more e-commerce. I call it the COVID trifecta, where we as consumers have changed our patterns. What does that mean? The acceleration of streaming brings opportunities to CTV. Identity has gone through massive changes with regulatory enforcement, not to mention technology changes from Google and Apple that really upset the apple cart. And what's nice about it is that the ad tech and Martech community have rallied to the cause. They're not hiding underneath the covers. They're adapting, making changes to live in today's new reality.
Yeah, absolutely. And it's pretty impressive buyers being able to get out there in this new reality. It's not as if COVID's away. We're at 200,000 deaths. There's still a presidential election going on, which could be described as contentious at best, kindergarten debating at worst, as many of us had to bear through the other night. But buyers are seeing through it, wanting to get deals done, wanting to push forward and move on with things.
And here's the important thing. making these multi-$100 million acquisitions is a signal of confidence.
Yep.
Confidence that the market is coming back, and that's a great sign for the marketplace.
Perfect. All right, let's move on to the individual sectors, and we'll start with ad tech. So, we saw finally a return to scaled M&A activity in the ad tech sector with 2 such deals this quarter. 4C was acquired by MediaOcean. You also have other great deals like Super Awesome being acquired by Epic. As you mentioned, there's a V-shaped recovery from ad spend perspective, which is certainly great here, and drove a lot of the confidence. The other big areas happening in ad tech, and the big announcement that happened in Q3 was around Apple, as you mentioned, right? They had sort of a bombshell release that they were going to move iOS 14 to opt-in for IDFA. They've now subsequently pushed that back. It's going to be at the end of next year. But what does that mean? What does that sort of privacy IDFA component mean going forward in the ad tech ecosystem?
Well, look, the whole world, this whole world has been described by the attributes of growth, complexity, and dynamics. And rarely have we seen the level of dynamics that we're now seeing, as mentioned, both from regulatory and technology changes. I think this fundamentally changes the game in terms of people's strategy with respect to how they utilize consumer data, which consumer data, how they're utilizing, with which permissions. And I think, again, the industry is responding by changing the way they go to market, changing their processes, because at the end of the day, it's not like we're going to go back to just contextual-based advertising. We still need to do it on an audience basis, but we need to do it differently. And like ad tech has done many, many times, it's adapting.
Yeah, I mean, if you haven't been preparing for this, then your head has been in the sand. The writing has been on the wall for some time. So, at least in conversations we're having, people are yes, we get some specifics. Apple is always light on specifics, but getting more and more specifics. But in general, most companies have been preparing for this, and buyers know what's expected.
And on the CTV front, right, we are seeing a significant, COVID brought about a significant acceleration of cord cutting and the shift from linear viewing to OTT, and that is only going to bring opportunity in this sector.
And not just CTV, also in just mobile use, podcasting and audio. Gaming is now becoming a form of entertainment that people are using more and more, even though they're not commuting as they were. And we'll talk about that a little bit in the digital content sector. So let's move on to our next section, Martech. Again, a strong quarter, significant growth in overall activity, also coming back strong growth in scaled M&A activity with 4 such deals in the quarter. We talked a little bit about the TransUnion, but we're only digging a little bit more there. Making 2 acquisitions this quarter alone on identity resolution just seems like a big opportunity. What do you make of that and the broader ecosystem?
Yeah, look, it feels like companies like TransUnion, which are very large-scale consumer data businesses in the offline world, are really just taking their rightful place with digital identity, and I would expect we will see more to come in that general trend.
Yeah, certainly they already bear a lot of our trust in what they take and what we allow them to use and sort of impact on our everyday lives. The other big story in Martech was actually the comeback of private equity. I don't know if this is hugely shocking, right? Private equity is out there to do deals. That's the business that they are in. So they may move quicker than some other, than the strategics who are really, bearing a lot more going on. But there were a number of private equity-backed transactions, and we expect that to continue as, deal activity and opportunities continue to grow. The other interesting part of Martech is, while TransUnion was certainly a strategic making acquisitions, there weren't a ton of others. But during this quarter, and really throughout all of COVID, the large public MarTech companies have started to perform extremely well. Their paper is becoming extremely attractive, and one would think would lead to more transactions, take advantage of that opportunity while it's here.
Yeah, I mean, SaaS models and DaaS models are great business models for the investor community, and we've seen that in the valuations, even of these large, data or data enablement companies. They're getting valuations through the roof, which ought to translate eventually into the private markets, and we hope lead to additional deal activity.
Yeah, every deal's pretty accretive when you've got 100 times revenue multiple.
That's right.
Perfect. So next we're going to move on to digital content. Digital content and direct to consumer, which we'll touch on next, have both been very strong throughout all of COVID from an M&A standpoint. So overall activity is low, but digital content's actually seen more robust scaled transactions throughout this entire year than they had even in 2019. The most significant deals this quarter, as I mentioned before, were gaming. So there's been a lot of activity in the gaming space. You have Microsoft buying ZeniMax for $7.5 billion, Take-Two's acquisition of Dots, Stillfront's acquisition of Nanobit, and Zynga's acquisition of Rollic, just to name a few. And this is really sort of to the trend we spoke about earlier, as more and more people are leveraging these games, even as they're not commuting, but spending time on their phones, spending time playing while at home to pass the time. The other area that continues to be of big interest in digital content is audio, with the biggest driver being the podcast industry. Most notably, this quarter, Stitcher was acquired by SiriusXM. So Stitcher previously was owned by EW Scripps. And this is really a big move by Sirius to come in and garner a larger podcasting platform, start to compete more with the likes of Apple, Spotify, and others. What do you anticipate coming on in the content sector? Anything else you'd add in here?
Well, we've been talking about the audio LUMAscape and the podcast opportunity. We mentioned it in Q2, and we saw a lot of activity there, largely by Spotify, both on a corporate development basis and on a business development basis. Yep. We saw the big Joe Rogan deal being signed. So I think this is more of that, right? This relates to this sort of notion of the COVID trifecta, where people's habits have changed, whether that's more streaming video viewing, more streaming audio in the form of podcasts, and more time doing gaming. So I think this is a manifestation of a reflection of the fact that there's a greater opportunity because of those accelerations.
Yeah, and I think one thing we would note to look out for in both these sectors is the vertical integration opportunities. So we've seen it in gaming, we've seen it with Spotify on the audio front, but combining ad technology capabilities with the content side. So a lot of the focus thus far has been on acquiring and boosting up content. The next to come is bringing the technology and own the whole stack in-house. All right, and finally, we've got the D2C sector. Similar to digital content, this has been a very strong quarter throughout COVID, throughout 2020. It has not missed a beat. Deal activity for direct-to-consumer companies is actually higher than it was in 2019, and even more scaled transactions. You talked before about the COVID trifecta. I think that certainly seems to be in play here.
Yeah. Absolutely. I mean, e-commerce is the third leg of that stool, that trifecta. And here's the thing, Conor. Not only are there legacy competitors in retail completely hobbled during the lockdown, but the shift towards e-commerce, which we saw a dramatic increase in e-commerce penetration in the U.S. During the last 6 months, that largely is here to stay. I mean, few people are going to go back to old ways, even when stores open. So I think that is somewhat permanent, and that should accrue to the benefit of as many of these players that are going direct.
And finally, we're going to touch on the public market. So, you can see in our report, we break out ad tech and Martech, public markets by company. We're not going to go through that here. In the last quarter, we really focused on what was happening in the overall market. The market saw huge gains. Many of those has continued. There have been some blips here or there, but the really fascinating story in the public markets, sort of year to date through Q3, is the use of capital markets to raise funds and really coming out in the public market. So, if you look at the numbers, the amount of capital raised year to date through September is the highest it's ever been. We're nearing the peak of the dot-com boom, with capital raised via the public markets. We're about 95 year to date compared to 107 back in 2000. All this is happening even despite all the uncertainty going on.
Yes.
Obviously, COVID, presidential election, et cetera. Talk a little bit about this. What are you seeing? What do you think about
Well, look,
this?
I take some solace from this in the sense that the market is up, the technology sector is up, and the good news about that is it's not just the big guys of Google and Facebook. We are really seeing a widespread of valuations across technology, including some of these new IPOs. So that gives me comfort that there is strong support for the sector and not just the biggest names. And so the more access to capital, and you mentioned record financings, that is a good thing because, again, it gets to this notion of investor confidence.
Yeah, and interestingly, it's not just typical IPOs, right? We are doing SPACs. We're seeing an explosion of SPACs.
Anything goes.
We could start one tomorrow if you're interested. Just a little side gig, and also direct listings. Both Palantir and Asana are direct listing as of yesterday, and so we are seeing companies taking different approaches to the public markets. And then importantly, while the public markets are here, the private markets have also maintained. Again, you'll see in this report there's 5 or 6 full pages of large financings that were done. VCs don't seem to be taking a break.
Yeah. No, I think I get yet another signal of confidence, right? Venture capitalists are active from home, and well, actually, that is a pretty interesting point, right? But if M&A and investments can be done in a work from home scenario, it means we got to do them remotely. That's a good sign that we can still function.
Yeah, why did I
in
put
that
this shirt on? I could have done this in sweats.
Well, and not to mention. But look, it's great. It's great that capital is flowing. It's great that the strategic dialogue is ongoing. All of these are signs of normalcy coming back to the marketplace, which is why we are so bullish on what we anticipate in both Q4 and into 2021.
Yeah, I think confidence is the word of the day here, and very excited going forward. Congratulations again to TrueOptic and TransUnion on a great acquisition, and we will see you guys next quarter for the wrap up of the year that is 2020. Thank you.